gotta be good.
If I get thrown out, I'll go live with my mom.
Mama, get off the mallet.
To the Real Estate and Chill podcast, the newest and coolest podcast. So tune in. Two experts discussing the real estate market. Loan officer James Chudley and associate real estate broker Kevin Iglesias. Beware, this is not another boring podcast. This right here is the shit you need to hear. Respectfully.
Welcome back. If this is your first time with us, make sure you guys hit the subscribe button, the notification bell, and make sure you share this episode. I'm Kevin Iglesias, associate broker, here with my co-host
James Shatter, United Mortgage.
today.
Oh,
There you go.
We have a very important episode today. No guest today. You know it's a serious episode when we don't have a guest. We're talking about something like very, very direct. It might not be as fun, but it's like very direct because there's something that we think that everyone needs to know.
Hot topic. What's the hot topic?
There's too many hot topics right now. The whole real estate industry right now is just like crazy. In terms of like mortgage rates going up, in terms of like supply of houses, in terms of like predictions on where everything's going to go in the future, you know, it's just a crazy time. So we just wanted to touch on, you know, a few different things, and we want to educate everybody, you know, on what we think they should know before they buy a house in this market, or if they should buy a house in this market.
Should you buy a house in this market? Ryan, what do you think?
Sure, why not?
Ryan says sure. Why not?
Okay. All right, listen to Ryan. All right, that was a great episode. I will see you guys. No, I'm just playing. But yeah, there's way too many factors going on right now. There's like a lot of. The thing is, like at the end of the day, I think that we're best put as educators, where our clients, whatever they want to buy, we give them the education that they need
And the guidance.
Right, to make the best decision that they can make. So this is something that we wanted to do for everyone who might be watching, who, you know, might not be thinking about buying a house, or, you know, might be thinking about buying a house and is renting right now, whatever the case may be. It's just important to know all this information. So
let's get right to it.
Let's
Interest
get into
rates, 5.25% currently.
Yeah, roughly.
Currently. That's insane.
So what's going on right now with the interest rates is that with inflation, the Consumer Price Index just came out with a statement today. So today's Tuesday, April 12th. The CPI came out and said that inflation in March was 8.5%. So what happened was the last 2 days, because of the fear that was going on with with everything that the Fed was going to say, the rates, the 10-year Treasury bond went up again. They're looking to combat inflation with an increase of rates, and that's something that they're going to have to do because 8.5% inflation is insane. You know, that's the highest that we've seen inflation since like the 1980s, I believe.
Which is crazy. I mean, inflation is real. Look at the gas prices. Look at the dollar store. Nothing's at a dollar at the dollar store anymore.
Dollar Tree's $1.25.
It's insane. I got builders who are building brand new houses right now who are paying like $30,000-$40,000 more in lumber just because the inflation keeps going up. It's insane.
Yeah, I think that it's something that the government has to do. A lot of people ask me, like, what are your predictions on the rates? And the thing is, like, the government has such a strong hold over the housing market. We don't really, like, necessarily can foresee everything that goes on. It's a lot of speculation on our part as to see, like, okay, this is what I think is going to happen. But the person who really, well, not the person, but, you know, what really controls the housing market is the Fed. Because they can control where rates are going to be. They can control a lot of different factors. So they're the ones who are really in control of what things are what's going to happen. But, you know, in terms of like an economic boom that we've seen in the past 2 years, you know, they need to. It's kind of like, think about it from this perspective. When when the economy is growing too fast, the government needs to scale it down. And when the economy is growing too slow, the government needs to scale it back up. So right now we're in the place where the economy is growing so quickly, you know, like houses, watches, gas, food, anything you can think of is more expensive. Rent is up 15% or 17%. I forgot what the actual number was, but, you know, rent's up a very considerable amount. You have housing prices going up. I don't even know how much it's went up, but we've seen prices go up hundreds of thousands of dollars in the span of like 2 years, right?
100%. I mean, last year median price was like $550. Now I just read a stat on Keeping Current Matters that it's $650. That's
Nassau County.
Nassau County.
And what about Suffolk? Like Suffolk is known to be like generally less expensive than Nassau. And you know, the thing is, we've had buyers in the past who've made like X amount of income and can qualify for this amount of a mortgage, right? With the increase in rates, the affordability is going down. So the same income that they make, they're not going to qualify for the same amount of house, right? It's going to be going down. And it's coming to a point where, if somebody is making, let's say, roughly $60,000, if they're trying to buy a house for whatever they could afford, there might be a situation where there might be no houses on the market that they can actually afford or get into. Like we've seen the open houses where they're listed sub $300,000. How insane are they? They're insane.
There's like houses like down the block. It's like a house party.
Literally.
People are waiting to get in the home, and then that house has about 15, 20 offers. So I had a guy come up to me at an open house I was having this weekend, and he asked me the price of the home. I told him we had offers over ask, and he was upset. He's like, "Why would you list the price at this home? Why would you list the home at this price, knowing that you're gonna get higher offers?" And I'm like, "That's just the market that we're in,
Yeah.
We can't control the market. It's insane right now. It's still insane. Even with the rates going up, I don't think that we're gonna have a price drop from here to tomorrow. I mean, what do you think?"
Yeah. I honestly think that, so when rates go up, house prices tend to come down. But I think that we're in such an interesting situation right now because with COVID, what happened was we saw demand for houses kind of like fizzle out, right? Like when it first happened. And then we saw that there was a huge, demand for houses when like things started to open up again, everything like that, because there was like a backlog of people who wanted to buy houses, who were starting families and everything like that, who didn't get houses at that time. So what happens is usually that whenever there is like, a backlog of people who want to buy houses or, a backlog of demand that needs to get filled up, it always just tends to keep pushing up other things. So let's say, for example, if there's 1 million people who want to buy a house right now, and there's only 200,000 houses on the market or 200,000 houses that are going to be put out every single year, you're going to need 5 years of, houses of people of just getting past that 1 million people who want to buy a house. Does that kind of make sense? Yeah. Does that analogy make sense? It's like, do I think that the housing prices are going to come down? I don't know. I mean, I think that so Bank of America estimated that housing prices by the end of 2022, housing will appreciate 10% by the end of 2022. And I don't really see that being, far off from like what I personally think, just because of the fact that inflation's still up. It's still at 8.5%. Real estate is an asset that is a hedge against inflation because it's a tangible asset. So if that's the case, then why would people stop buying real estate? Why would people stop buying tangible assets? Why would people stop trying to hedge against inflation? And people still do that subconsciously. It's not like not everybody who's buying a house thinks about inflation, but, they're doing that. And in return, it's still helping them,
I think even with the interest rates going up, and there's a lot of people saying, "Oh, I don't want to buy right now. The interest rates are this price," whatever the case may be, they're skyrocketed. But you got to remember, if those same people are renting, you're still paying rent on something that you don't own.
100%.
So I would rather pay a higher interest on a property that I do own, opposed to paying rent on a property that I don't own, paying somebody else's mortgage. It just doesn't make sense to me.
I mean, so I was actually speaking to a client on Friday who was thinking about renting versus owning. And she had good income. And basically the conversation was, she was saying, I'm comfortable with renting. So, and it's just like the housing market is crazy. But I was telling her, I was like, if you're paying, she was paying 15 and change in rent every single month. I was like, if you're paying $1,500 a month in rent and you're renting for 5 years, you're paying $90,000 in just rent. That's not going to you. You're building no equity at all or nothing like that. But what happens is when somebody's renting at the moment, and they're waiting for house prices to go down or interest rates to come back down. Like, let's be real here. I would love to have 3% interest rates or sub 4% interest rates again. But when do we really seeing that happen again? You know what I mean? Like, maybe it could happen again soon if something happens. But I don't see that really happening for, like the next couple of years. I would say like it's probably not going to be there.
And let's just put an example out there. So all right, the rates are right now at 5.25, right? Let's say hypothetically speaking, a person is paying.
They're like the general 30-year rate at like, depository banks are saying are like 5%, 5.25. Like that's what the rates that they're giving out are.
Let's just say they're at 5.25, right? On the higher end, 5.25. Let's just say somebody's buying a house, their monthly payment is $3,200 a month. If somebody's renting a house, paying that same rental income, like rental payment a month, it just makes sense. Like you should buy the home instead of renting it. You know what I mean? To me, it just doesn't make any sense.
So for the numbers that I worked up before the show, just so we could just get an idea. So based on principal and interest, we were looking at $500,000 for two separate properties. We were just talking about this before for anybody watching, and we were just like giving out a number just to show us the difference. So a $500,000 house, $100,000 down payment, which is 20%, and an interest rate of 5.25 is going to be roughly $2,200 just in terms of principal and interest. And then another payment for $500,000, 20% down, with a 2.5% interest rate is around $1,580. So as you can see, that number is a lot higher. Not a lot higher, but it's, depending on who you're talking to. Like it's going to be higher. That's like a $600 difference in monthly payment just based on principal and interest.
That's a lot to somebody who's working and paying the house all by themselves. Every dollar counts with kids, taxes. It's not cheap to live on Long Island either.
Yeah.
New York in general.
It's tough because like that payment, that $600 will be the difference of if they can qualify or not for certain scenarios.
So let's talk about that, because now with the rates going up, if you had a pre-approval, let's say 30, 40 days ago, to me, that pre-approval is not valid anymore, because if that person has a high DTI and now the rates are 5.25%, let's just say.
They don't qualify.
Exactly. They don't qualify. So if you're a realtor, you should be checking everybody's pre-approval. Like I'm getting offers sent to me 30, 60. You met with some guy who had a 60-day pre-approval, right?
Yeah.
I was like, look, I'm going to do my homework on this and make sure he still qualifies. I sent you all the paperwork, and he did. But I think if you're a realtor, you should be checking every offer that comes across your email, your desk, or whatever the case may be. If it's 5.25% now, they got a pre-approval 30, 60 days ago where rates were like, in the 4s?
Yeah.
If their DTI is way too high, they may not qualify for that same home. And not only that, you're showing them houses that they may not qualify for, and that buyer who was pre-approved is no longer approved.
Right. And I think that it's important to, vetting buyers, like something that, we do as well, just to make sure in this market when everything's moving so quickly, like that's so important to do. Like if you're a realtor and you're calling the lender who's working on your file, if they will give up the information of like what DTI ratio is going on right now, is this you don't even have to ask that question. Just ask, is it a tight deal? What are we looking at? When are you locking the rate? Right? Like these are all important things, because if their ratios go up to over where we need to be at, then we're not closing.
No.
Unless something else happens, unless they bring more money to the table, unless they pay off other credit cards or other things. But it's not even an issue of, so there's, on the mortgage side, there's two main things. There's a front end and the back end ratio. The front end ratio is your income with the principal and interest. And the back end is, with all your debts as well. So the front end is just the mortgage side of it, your income with the mortgage. The back end is with all your other debts. So the problem that we're going to be seeing is the back end is a lot more fixable than the front end. Because the back end, if they have some debts, you can ask them to pay off certain debts or whatever the case may be. Front end, you can't really move it much unless you put more money down, or you add a cosigner to the loan, or you add more money to that. There's a few ways to do it, but the front end is a lot more difficult than the back end. And with the rates going up, it's more going to be a conversation on what the front end ratio is and how flexible that is. Like if their ratios are low and you're going into contract, all right, then there's somebody who you don't have to worry about. But if they're maxing out or even like 1 or 2% under where the loan limit at the bank is, not loan limit, but the front end ratio is at the bank, then they're, that's something that is a concern. So I would just say it's very important, because at the end of the day, what's the most important part of a real estate transaction? The money, right?
Yeah.
So that's the most important thing right now. And I think that it's something, I think you're 100% right. That's something we'll just have to look at.
So let's talk about when the interest rates were like 2.25%, right? On the low 2s, everybody was refining out of their home.
Yeah.
Getting a much lower interest rate. Buyers were getting into houses at basically a 2.5, like 2.6, etc. interest rate. Now that these rates are a lot higher, it's knocking out so many buyers, right? There's less of a buyer pool. But I think that people always ask me, is it still a good time to sell? My answer is 100% yes, because the buyers who are shopping now are buyers who are very strong. Correct me if I'm wrong.
They are.
So is it the right time to buy a house? I would say yes. Despite of the interest rates going up, again, you can never tell somebody, no, it's not the right time for you, whatever the case may be. Again, you're going to be paying rent no matter what if you are renting a home. If the interest rates are what they are right now, it is what it is. You need a home. People need homes.
Right. That's
So-
never going to go anywhere.
Not at all.
Even if so, we've seen rates like, it's funny because I've been in the industry for almost 5 years. 5 years next month, and one thing that everyone always told me is before, because I just got licensed, I just graduated from school, like when the boom was happening, right? Like in the beginning of COVID, I was still in college. After I graduated, the rates were so low. So it's just, but I've also seen it where the rates were higher. But the thing is, like, this dramatic increase makes this market so tough for lenders, because if somebody doesn't know how to educate a buyer on the increase in rates and everything like that, the buyer's not going to feel comfortable with them, and they're not really going to understand them. If you tell somebody, if somebody thinks that rates are at 2% still, right? Because there are people that still have no idea what's going on. They still think that rates are at 2%. If somebody can't effectively explain to them that rates are not there anymore, they're just going to think, oh, this guy's just trying to pull a fast one on me. And
Just a
charge me higher
salesperson.
rate. Yeah, like that's what they're just going to think. So it's really important that you have to educate your buyers from a mortgage standpoint on that's where the rates are. Educate them. Something that I've seen that's helped is, because a lot of times, like, people are a little wary of, like, who they're talking to, because, sometimes I don't meet my clients right away. I don't even meet them until we get to the closing table. I don't meet them in person. You know what I mean? So sometimes, like, sending them articles on, like, what's going on, telling them to follow the 10-year treasury bond, which is showing them where rates are going, just to show them, just to give them some more, like, validity on what you're saying, just to show them in proof of whatever you're doing. That also goes a long way as well, because you really have to explain to them and educate them, because they're just going to think you're pulling a fast one on them. They're going to think, oh, rates are still so low, like, but they're not,
I think as a realtor, being a real estate agent, associate broker, if you're in this field, you have to get familiar with the loan side of the things and the real estate side of things. You should know what an FHA mortgage, what you need to qualify for it, conventional 2 or 3K loan. You need to know about the interest rates, not just the comps, or what can I sell this house for. There's more that goes into just selling real estate than putting the house up. And I think that's something we're going to start seeing, where a lot of the new agents got their license and they're just listing houses, and it sells like in the next day. There's a shift coming.
Yeah.
I don't think that we're going to be seeing bidding wars like we used to, like opposed to last year. Last year we were like 20, 30 offers on houses. Now we're seeing offers over asking. Bidding wars are still happening, but it's not so. It's not that many offers over asking as it was last year.
But I think that's a good thing, honestly, for me, because so you're on the listing side and the buying side, right? Like on different scenarios, but I'm always on the buying side. So it's just like, for me, for the clients that I work with, like, I don't want there to be bidding wars. You know what I mean? Like,
Because it's making it harder for you.
It's making it so like full background on like what I'm talking about. Like, I'm very open about like business and things like that, because there are some, people who watch the show that don't want to like just hear all like the nonsense, the bullshit, like, oh yeah, like everything is so amazing. Like, bro, this time frame, like what's been going on recently, like in terms of my business, is that I have been so busy working with like individual clients who are trying to get pre-approved for the past like year. It's been like this. That I've been more busy than ever. Like, I've been working with clients, getting pre-approved, everything like that. But the conversion is not as high because of the fact that they can't get their houses, like whatever the case may be. They're not offering, whatever the case is. The conversion ratio is important. And once the housing prices, like not that they go down or anything, but when there stops becoming bidding wars on every single house, and like it's impossible to get a house, the conversion ratios are going to go up, which is a good thing for me, because I want to see my clients get their houses. You know what I mean? So, but do you think that people are still going to be listing their house in the next couple of months? Like, let's just talk about this year. And I think we should gear this episode towards this year.
I have a lot of inventory coming up, and I think an agent should be well-versed in the real estate field and the mortgage side, because if you are knowledgeable in both, you'll know how to give knowledge and value to your client. I still think people are going to be listing their houses left and right.
100%.
Because people still want to go to Florida. People still want to go to South Carolina. People still want to go North Carolina or down south or wherever they want to go. Again, it's a supply and demand. There's little to no supply. There's a high demand. That's why we're still seeing bidding wars, even though that the interest rates are 5.25% now, or a little bit over 5. It's not really affecting much. The stronger buyers are still out there. The buyers who really need a home, the buyers who have a low DTI, who can qualify for the home. It's not like before when rates were in the 2s, where everybody was buying houses, right? Everybody was literally buying houses because it was like basically the bank was giving out free money.
Right.
We haven't seen those rates in years. I mean, I've been in the business since 2016. It wasn't a seller's market when I got into the business. 2018, 2019, I was still able to negotiate 30, 40, 50,000 off a purchase price for my clients. You don't really see that happening now. It's like you got to negotiate up 40, 50,000 for your client opposed to reducing the price. There's little negotiation now. Like, you have to be super aggressive. And I think this is why we work very well together, because when I send an offer, you're CC'd, I do my homework, you check out their DTI, we make sure that everything is in order so we get the offer approved and accepted. So,
and also another thing is, like, I think that what you said was very vital as well, negotiation. Because I'm not going to lie, like, obviously I'm not listening to negotiation talks between realtors, but, like, I don't think there's been much of that, like, at all. Like, I feel like people are just like, I'll waive this. Like, everything is geared towards the seller, right? Like, everything is geared towards the listing
If you're
side.
a seller, even though the rates are up right now, you should sell your house. Because right now, people are getting the offers accepted with as is. I mean, you don't have to lift a finger to do anything.
Yeah.
But let's talk about that, because there's still certain bank requirements that need to be done if the bank's appraiser says, hey, this has got to be, fixed, or whatever the case may be.
Yeah.
There's still rules and regulations that you guys got to follow, like FHA rules and regulations. And I think that's one thing that a lot of agents don't get well versed in, and like they don't do their homework and their knowledge, because they don't even know. I've run into so many agents that don't even know, like, this is going to be an issue, that's going to be an issue, whatever the case may be. But again, if you're a seller, I think it's still the right time to sell. If you're a buyer, I still think it's the right time to buy, depending on your circumstance, right? Because we can say, hey, yes, sell your home, buy a home, or whatever the case may be, because we want to make money. We're in the field of, we don't get paid until a deal closes. But you have to be familiar with your client's needs and wants to better guide them and educate them and walk them from A to Z, not just sell them. Because when you're dealing with somebody who feels like they're just being sold, chances are you're not going to close them.
100%. I think that's a good point too. Like, I think that nowadays, I mean, I'm working still to this date. It's funny because I'm still working on refinances and stuff. There's going to be a need for us at any point in time, right? That personal touch that we have, like, they could work with whatever bank they want to work with. They can work with whatever realtor they want to work with, but they choose to work with us for a reason. So I think that, going back to what you were saying about should you buy a house, sell a house in this market, I think that you should do obviously what's best for you, but I think that the buyers right now, I think it's the best time to buy that. Like, it's still a great time to buy a house. Like, selling houses, like, they're still going to get top dollar. So it's like, I don't really think I need to say much about it. If your situation allows it, you should do it. But buying your house right now, like, you're going to see house prices go up. Rates are going to keep going up. The earlier you get in, the better. That's all I got to say.
I think what I'm seeing right now is a lot of buyers who are putting in offers, they're backing out. They're backing out of those accepted offers because it's starting to realize, like, whoa, this mortgage payment's going to be way too high. I don't feel comfortable walking into this. They might not even qualify. Or if it's something that, like, financially, like, this is not the right thing for them, you should never push that client to be like, no, you should buy it. You could refi later. Like, what happens if the interest rates keep going up and up and up and they can't refi and get a lower, interest rate? It doesn't do well for your reputation. So if you're a realtor, I think you should stop trying to sell people and start to educate them and show as much value as possible, because that's how you're going to last in this business. If you're a new agent that just got into the business, link up with somebody like yourself, with James. Let him ask him all the questions about loans and the rates and everything. We're having a seminar. Yesterday's price is not today's price, which is true. Yeah. Things have changed dramatically in the last 30 days. That's what I'm saying. Like, do your homework, get familiar with the mortgages, get familiar with real estate, and just be a professional in all aspects. That's how you'll get the referrals. That's how you'll get the repetitive business, and you're not just be a transactional agent. A lot of these agents that are getting into the business now may have a hard time if they're not working with somebody like who's on a team, like like yourself, or who runs a team like myself. They're not getting coached or being guided correctly. They're just like what do I do now?
There's out to do their
exactly.
thing,
A lot of these new agents are going to be out of the field. They're going to be out of the business because they got into the time where it was so easy to sell a home. Now that things are going to start changing and the shift is coming, it's going to be a lot harder to sell a house. You're going to have to do a lot more work to sell a home.
But I think that knowledge is power, and I think that being a professional means that you should be very knowledgeable about what you do. Like, if I have to ask you, like, if I'm a client and I'm asking you a question and you don't know it, if it's not a very specific question, that's your fault. Like, if you ask me, like, oh, what's the difference between FHA and conventional? And I'm just like, let me get back to you on that. Like, I don't really know.
The name.
You know what I mean? Like, you can't do that.
No.
The same thing goes for a realtor, too. Like, if they ask you a specific, like, a certain question that you should know and you don't, that's on you. And, like, the more knowledgeable you are, the better you look to them and the more business you'll get from them. And you'll just be the go-to person indefinitely. Every single person I work with, I want to be their mortgage banker for life. Like, I don't want them to think of anybody else. I don't want them to have any doubt that they can reach out to me whenever they want to, and I'm always there to answer any question that they have, even if they're looking right now and they're calling me just about like a specific area, like live quotes. Like, you should see what I do for my clients. Whatever they want, I get it done for them. If they want like a breakdown between different properties, I literally break down an Excel sheet for them.
No, you've done it for me. You've done it for me.
Like, I do that for every single person.
Yeah.
Like, I always do that because it gives them like it opens their eyes, and lenders aren't doing that. You got to stand out somehow. You know what I mean? And my background in finance, like, I love Excel. Like, that's just what I do, and that's just something that I can implement into what I do right now, and it helps everybody.
So
you know?
let's put this into real life, right? Because all right, you're doing a mortgage, you're financing a deal for me right now, and I was putting in offers. Even myself as an agent, as an experienced agent, associate broker, I was sending offers in. I would CC you. They would say, hey, you got to waive the appraisal and you got to have a gap for this. And I would tell you, yo, they're bugging. I'm not doing any of that. I'm coming in at this price. Somebody beats me. It is what it is. Like,
I remember I was like, bro, you're crazy for asking for that price. I was just like, yo, you're the person that makes deals happen. And I'm just like, bro, you really think it's going to happen?
I'm like, yo, I'm not waiving an appraisal. I don't care. Like, but it is what it is. If it's meant to be for you, it's meant to be for you. But I was looking at it like a number aspect. Like, even though you're in the business, there's a lot of buyers who are not getting the offers accepted with certain agents are going directly to the listing agent. That's something that I don't do. Like, if I know that a buyer is working with somebody who came into the door, an open house, or whatever the case may be with somebody else, I would never be like, okay, yeah, you can work with me to get your offer accepted to make a high commission. I don't do business that way because, again, we're in a reputation business. Like, that gets around really quickly. And real estate, people think that it's a small world. It's a big, like, world. It's not. It's actually a small world in this business. Everybody who does business knows everybody who does business, right or wrong?
Right. No, you're 100% right. It's a very well connected. The Long Island market specifically is very well connected. So it's just like everyone knows each other, especially now with social media and everything like that. Everybody knows the other person. So I think that's a fair point. And honestly, I see that happen. I had a buyer out in Queens, and I referred it over to an agent, and then the agent showed them so many properties, and then they went back to that one of the properties that they showed them, and they put an offer in on it without that realtor, and they called me about it, and I was just like, what are you doing? Like, that person set out time for you. They don't work for free, and they're doing something for you, and you're just going to go back and make an offer without them? Like, I was like,
it's disrespectful. Yeah,
like,
it's disrespectful.
I don't work for that client anymore.
But let's talk facts. If you're an agent, showing out buyers. So if I had you as a buyer, I'm showing you homes, but I don't have any paperwork. I don't have a contract binding us. That's on you. You know what I mean? Like, that's on you. You should really have all your paperwork in order before you start taking a buyer out to see homes. So, I mean, yes, it's disrespectful, but you should have your business right so it doesn't happen to you.
Some people do, some people don't. I see from both sides. Some people, come with the aspect of like, all right, if you want to work with me, you're going to work with me. And then some people like are just like, no, you have to sign this. And I mean, I get it from both sides. I don't know. Like, I'm not a realtor, so I don't know what I would do, but I could
Think about it like this. I don't want to do business with somebody who's not going to work with me exclusively, who's going to be shopping me around, just like as yourself, right? You don't want to work with somebody who's going to be shopping you around from place to place and be like, all right, well, you telling me the truth? Are you lying to me? You have to develop somebody's trust in order to sign a contract, right or wrong. I'm not signing any contract. Like, I have compromise issues. I have had them for a very long time, but I'm like, I'm not signing this if I don't feel comfortable with you. You know what I mean? Like, if I had me and Ryan would have to hit it off in order for him to be like, you know what, I feel comfortable with this guy. He's got my best interest in his best interest. He's going to help me find that house. He's going to do the right thing for me. He knows the inspector. He knows a lawyer. He knows a loan officer. Having full control of a transaction is gold.
Yeah.
Because then you know exactly who to contact. I can contact you at 11 o'clock at night and be like, hey, yo, this is what's going on. What's it looking like? You plug in the numbers or whatever the case may be. I can call my attorney anytime, and he'll let me know, like, this is what's going on or whatever the case may be. Eagle Eye Home Inspections that we work with very close. They'll send us the report right away, so we know exactly what's going on in the breakdown of the home or whatever the case may be.
Yeah, it's all smooth. It's smooth, like seamless transaction. It's not like you don't know who the lender is. Like when you try to call them, like they don't pick up. Like they don't reach back out to you for 2-3 days. Like, you know, like it happens. You know, like that's the worst though. Like that, you don't want that.
Should you buy a house right now?
The answer's clear to me. Yes, you should.
Should you buy a house right now, Ryan?
Yes.
He said yes.
But what's the last few things we should let people off on?
Just get educated. If you're a buyer, if you're a renter who wants to buy, interview a couple of agents. You don't have to work with the first buyer's agent that you meet with. Interview the right agent who's going to be the right person for you, who's going to guide you and give you the knowledge, the value that you're looking for. Because a lot of buyers have a lot of questions, especially if they're first-time home buyers and they're unfamiliar with the process. You got to provide a lot of value to them, right? Just give you a scenario. I went to a listing appointment over the weekend. The person met with 10 agents. We got the listing because we provided so much value. We answered all her questions, and we brought up the interest rates that they're now 5.25%. She said, out of everybody I met with, nobody has brought up the mortgage side, which she gave us the listing because we were professionals. Not only did we know about the real estate side, but we also knew about the mortgages and what's going on in the industry and how this could affect somebody who had a pre-approval 30 days ago, who made an offer on this home, on her listing, who may not qualify for that home now because the rates have changed. So having that knowledge set us apart from everybody else. We got the listing. It's up now.
Oh, you're welcome for giving you that information.
Thank you. Well, I'm always picking your brain like, yo, what are the rates now? What are the rates now?
One thing that I have to say is I don't remember when it was, but this was like a month ago when the rates started to move up. You know, like you reached out to me and you're like, yo, can you give my team like a breakdown of everything going on, like where we're projected to go, and everything like that. And the funny thing is, did we not talk about this beforehand? Like we literally talked about this exact scenario.
Yesterday's price is not today's price.
But that was so, like, the thing is, like, you know that you have to know about these things. And, like, I think that's what makes a great realtor because you have control over all different aspects of it. You're not a lender, but you know a lot about what a lender does and everything that you need to know about what we do. Obviously, you don't have to know every single specific thing, but the general view, you know, and you know everything going on. And your team knows everything going on. So I think that's something I would leave off everybody with. If you're a realtor, connect with me, reach out to me. Let's do something. You know, Kevin and I tomorrow, we're going to be talking about, well, tomorrow's going to be Wednesday. It's going to be before, like, after this episode is going to air after we do the seminar. But, you know, tomorrow, you know, I put out a Instagram post and I was just saying, you know, let's talk about rates and marketing for the summer because this summer is going to be crazy. It's going to be crazy for the fact that rates aren't super high yet. At the end of the day, I know we were saying rates are higher. They're really like average right now. Like rewind 2 years ago, like they're not like
2019. The rates were 4.25%, 4.5%. So we're not too far off.
But like before that, the average rate usually is around 5%.
I mean, I was reading something like 2008. The rates were like 6 to 7%. Yeah. But then again, you got people who bought houses like years ago before that who were like, oh, my interest rate was 10.25% or 11%. Like, so it just all depends on the on the time.
I feel like we're saying that, but they're really just back to normal. Like right now, that's where it is. But where they will go, I don't know. But
that's interesting. Yeah,
that's where we'll go, I don't know. But I think that right now, where we're sitting today, it's March. I mean, it's March. It's April 12th. I'm so backed up. It's April 12th. the rates are normal. They're average right now, right? There's nothing to be too concerned about if you're buying a house because you just didn't get the big discount that COVID brought. Really, at the end of the day, that's all it is.
And you should have, but you were scared.
Yes.
And you didn't want to buy.
Or maybe your situation didn't allow you to, but
let's be real though. A lot of people are like, oh, I don't want to buy real estate. In reality, you should buy real estate, or like you should not wait to buy real estate. You should buy real estate and wait.
100%. The thing is, remember when we were preaching to everybody that like this isn't like an I told you so or anything like that. This is just like what we do.
It's facts.
It's just because we just want to say this because we just want you to know the validity of what we say because we're professionals in this industry. When we were telling people the rates were so low, the monthly payment is so low. Yes, you're paying a lot for the house, but still, the house prices that you bought it for a year ago in 2020, 2021, it's more than that now. So you got the lowest rate. You got a good price. You know, you should have bought at that time. Right now, the prices are up, but in a year from now, I think prices are still going to even go higher. And your rate's going to be, you know, you're going to get an average rate right now. But I think I agree with one of you said, 100% of what you said. Buy real estate and wait. Don't wait to buy real estate.
If you are financially secure where you're in the position that you can buy real estate right now and not be house broke, you should buy real estate right now, regardless of what the rates are. Because the same people who were saying, oh, the market's going to crash when the interest rates were like 2.25% are the same people who didn't buy real estate who are now kicking themselves in the head because the rates are 5.25%. Like, wow, I should have bought real estate when it was 2.25%.
Yeah.
You know, when the rates were 2.25%. So don't wait. Just buy real estate. If financially it makes sense for you, do it now.
You're going to be building equity. You're not going to be losing money every month for rent. If you're paying $1,500 for 5 years, again, I know I said this, but that's $90,000. Imagine what the house value of a house you'd buy now would be in 5 years from now.
And stop telling yourself, I'm waiting for the market to crash. I'm waiting for the market to crash. Because you've been waiting for how long and you still have not bought real estate. So stop waiting.
I agree.
And just buy real estate.
This is not like the whole thing, like the COVID pandemic, like housing boom, I guess is the best whatever word for it. It's not like the 2008 market where you know loan officers were giving out loans to anybody with a pulse. It's not like that. This is a completely different market. And when you look at the macroeconomics behind what's going on, dive deep into it. Call me, call Kevin. You know, ask us any question that you have if you're on the fence. If you're an agent, reach out to me. Let's connect. Let's get you educated on what you need to know to hit this difficult market that we're going to hit. And
that's it.
We'll take
the
it
questions
from
are free. You can contact us. Where can people reach out to you?
Follow me at Finance by James on Instagram.
Follow me at Kevin Sold My Home on Instagram and all social media platforms. Make sure you follow the Real Estate and Chill podcast on Instagram. Again, if this is the first time you tune in with us, hit the subscribe button, the notification bell. Make sure you share this episode and hit that like button.
And the thing is, for the next couple of weeks, months, whatever the case is, we are going to be dropping knowledge every single week. You know, we're usually like a very entertaining podcast, which is what we try to do. We will still keep doing that, but at the end of the day, like, you know, when
knowledge
things are going to
get,
we're going to be educating. We're going to be sharing knowledge on everything. We're going to be doing our research on certain things so you don't have to, you know, and we're going to take care of everything together. So keep up with us, you know, watch our episodes, reach out to us with any questions, and
hit the outro.
Thank you for tuning in to the Real Estate and Chill podcast with James Chaudhry and Kevin Iglesias. Don't forget to like, comment, and subscribe. Also, share this with your friends, your enemies, your mother-in-law. No, seriously, this podcast is so fucking good. You might want to tell your ex. See you next time.